Alright, for this video I want to cover a sample form 8889 for health savings accounts. And in this example we're going to have a single filing taxpayer, John Q. Smith, and he's going to have self-only coverage. So we've got the 8889 here, it's just one page, but it is also part of John's full 1040. So we'll cover the 8889, but we'll also cover the other areas on the return that are impacted by this form. Now I've also got just one slide here covering some background on HSAs, high deductible plans, and some of the dollar amounts and limits that you need to be aware of for the 2023 tax year. So in order to even have a health savings account, you have to be covered by a high deductible health insurance plan. If you have a health insurance plan that doesn't qualify as a high deductible plan, then you really can't use an HSA. All right. Now, if you're covered by a plan through your employer should be able to provide this information to you, and they often will open HSAs on your behalf, right? So they can open an HSA, they can put money into it for you. And the nice thing about health savings accounts is when money is put into that by the employer, it's not taxable income to you. So you don't have to pay any income tax on it. Now, the appeal with HSAs is when you put money into the HSA, you are entitled to a tax deduction for those amounts. So the amount that you can put in depends on what type of coverage you have during the year. So if you're self-only coverage, so that means it's just one person that's covered by this plan, you can put in a maximum of $3,850 for the year. And if you have a family coverage plan, it's a maximum of $7,750. And then as I noted earlier, right, if you have a plan set up through your employer, the employer can put money in and it's not taxable income to you, but you still have to account for those amounts towards your total annual contribution limit. So for example, if you have self-only coverage up here and your employer puts in $3,000, the maximum that you could put in as extra would be $850 because that is the limit for the 2023 year. All right, now with HSAs, the distribution, so the money in there, if you take it out, you should be using it for qualified medical expenses. So if you have any distributions during the year, those would be reported on a 1099 SA. And so it's really important there, and that includes money that you withdraw in cash or if you use the debit card that's attached to the account. If you don't use it for qualified medical costs, then you have to report the distribution as income. And there's a penalty. So you report it as income and you pay a 20% penalty tax. So it's really a good idea to not be doing that. Make sure that all the money in there you're using for qualified medical costs. All right, so let's look at our fact pattern here. We have John Smith. He's covered by a high deductible plan at work, and he has a health savings account. Now, during 2023, the employer put in $1,000, and this is reported on John's W-2 in box 12, code W. All right. Now, John also put in an additional $750, and then during the year he had to withdraw $185 to pay for qualified medical costs. So how does John complete his 8889? Well, the 8889, you start at the top with indicating what kind of coverage do you have. So you have a high deductible health plan and you have self-only coverage. That's important because it lets the IRS know, okay, based on your age, what is going to be your annual contribution limit. So self-only coverage, he's under 55, and so the maximum amount that he could put in is $3,850. Now, the amount of contributions that he made during the year is reported on line 2 as $750. And note the note here, do not include any employer contributions on this line item, right? So we've got the line 2 amount, line 3. Line 4 is 0 for John because he doesn't have any Archer MSAs set up. So line 5, we subtract line 4 from line 3, and we're left with $3,850. Line 6 asks us to enter the amount from line 5, but if you and your spouse each have separate ones and family coverage, see the instructions for the amount to enter. So if you and your spouse have separate HSAs, you have different reporting requirements when it comes to line item 6. All right, so line 7, we're not over 55, so age 55 or older, you have to complete line 7, not applicable to us. So the end number on line 8 is the $3,850 number. So add line 6 and 7, we get $3,850. Line 9 is where we report the employer contributions. So this amount, you can find this on your W-2. If you look in box 12 and you see a code W, you'll have the employer contributions to your HSA. So the $1,000 is a reduction to our annual limit. And so line 12 is the maximum amount of additional HSA contributions we could have made during the year. So $2,850 is the difference there, right? Line 11 deducted from line 8. And the amount we put in is the $750. So we haven't gone over this threshold. So the HSA deduction here, now this is the amount that we're going to be able to deduct from our income on our tax return. So we enter the smaller of line 2 or line 12. So line 2 is $750, line 12 is $2,850. So the smaller amount is going to be $750. So if we look at Schedule 1, Part 2, line 13, this is where we report any kind of additional income or adjustments to income. If I scroll on down here to Part 2, adjustments to income, we can see the HSA Health Savings Account deduction, Form 8889 for $750. Now notice how it's just the $750 that John put in. We're not deducting the $1,000 from the employer. And that's because the amount that the employer put in wasn't included in John's taxable income. So it wouldn't make sense to deduct it because we would be effectively double counting a deduction. All right, so we've got the $750 that's a tax deduction. So now on to Part 2. So Part 2 covers distributions. If you had any distributions during the year, you would have gotten one of those 1099s. And so you report the total distributions received on line 14A. So we've got $185 that was taken out of the count. Now we haven't done any rollovers, so line 14B is blank. So line 14C is simply the 185. And then on line 15, we report the qualified medical expenses that were paid using these distributions. In John's case here, he used the entire amount for qualified medical, so he reports 185 there, and his taxable distributions is 0. So long as you use all of the distribution for qualified medical, you're not going to have any taxable HSA distributions, and you're not going to be subject to that additional 20% tax, which, let's call it what it is. It's a penalty, right? They call it a 20% tax, but that is a penalty on failing to use the income in the appropriate manner. All right. Okay, and so Part 3 doesn't apply to us in this circumstance. So we've left Part 3 blank. This would apply to you if you fail to maintain your coverage throughout the entire period, right? So nothing in there applies to John under this circumstances, so he can leave that section empty. So that's his complete 8889. Now, one last thing to touch on, if we go to Schedule A for itemized deductions. Now, John is claiming the standard deduction, right? So he's deducting $13,850 there. He's not itemizing deductions. But I want to highlight that on the itemized deductions schedule, at the top here, we have medical and dental expenses. If you had your medical expenses covered by the HSA, you cannot also report them up here as itemized deductions, right? Because again, it would be double counting the deduction effectively. So if you have medical expenses that were unreimbursed, then perhaps you can report them up here. But when you have medical expenses that were paid for out of the HSA, you would report those here, and then that's it. You can't be reporting them again on your Schedule A. All right, so that covers it for this video. Hope that was helpful. If you have any questions, feel free to leave a comment below. And as always, I appreciate you watching, and I look forward to seeing you on the next video. Thank you.